All righty, folks. She is back from a week-long real estate event that was hosted by the real estate guys, Robert Helms and Russell Gray. And one of the speakers at the event is someone that I would like to see speak someday, and that was George Gammon. George Gammon is somebody I follow on YouTube, but I'd love to see him speak in person. So, Anna, was he someone that is must-watch TV?
Absolutely. I really enjoyed listening to George, and I got to talk to him and ask him some questions on his thoughts about, the long-term health of the economy and kind of where things go in terms of interest rates and inflation over the long term. And we're very much aligned on our long-term view of the US economy and the global economy. He's very well researched. So I don't know that he's invested as long as we have in real estate, but he is a true student of the economy, which is something I really appreciate because, as you and I have discussed a lot, it doesn't matter how great you are in your particular niche and how much you have figured out. If you're not watching the economy and its potential impacts on your income and your value, you could miss the boat. You could lose a lot of money and you can miss a lot of opportunities. So I appreciated how astute he is on the economy and how much he really researches and tries to paint a good picture of where things are going and how it might impact us as investors.
Yeah, I think George does an amazing job of trying to simplify very complex, interworkings of an economy. He
Right.
obviously has his opinions about the Fed, which I don't think is a secret to anyone, which may color some of his opinions. But I think his economic research and ability to break it down is might be second to none, frankly, his whiteboards and things of that nature. I am curious, did he talk about M2 money supply and the fact that it's crashed 5%, has done that since the Great Depression? Was that maybe part of his talk track, or he didn't go there this time?
He did. He did talk about money supply, and he and Russell Gray had a really passionate, fun debate to watch to kind of talk about, you know, does the M2 money supply, the movement of money between the Fed and the Treasury, really impact inflation or not? Is it just a moving from one balance sheet to the other? Does it actually, trickle down into the economy, and how long does that take? So really interesting, takes on money supply itself and its impact on inflation.
I am curious. One of the things that I've always wanted to ask George Gammon is, so I don't know if he shared this or this, but he owned, I think he owned a bunch of single family homes, certainly residential real estate, bought during the crisis. So good for him. Bought at the bottom or near the bottom. He did
Mhm.
sell, I think, the entire portfolio in 2018. Um, but he talks a lot about inflation. He talks a lot about these things, and I've always wanted to ask George, is like, if you, because he actually did a video about inflation being 10%. And I'm like, if you really believe that inflation was 10%, why wouldn't you go buy as many single family homes as you can with 30-year fixed rate debt at the time at 5%? The
Mhm.
debt would, I mean, talk about, let's use inflation to get rich, right? You got fixed
Yes.
rate debt at 5, it doesn't change. You're going to, the asset will go up 10%, rents will go up 10%, certainly costs will, but your cash flow is going to explode. I'm always curious why he doesn't talk about buying residential real estate if you believe inflation's going to go to the moon.
Yeah, I think that's a really fair point. I think that if you looked back a couple of years ago, most economists really thought that we might be, heading into a recession.
Mhm.
We were in a manufacturing recession, January of
For sure.
2019. We had kind of this similar to a taper tantrum in December of 2018 when the Fed tried to raise rates. And so
Mhm.
I think a lot of people thought that the economy was really going to start struggling and we might go into a recession, which would bring real inflation down for a while. So, without putting words in his mouth, I think that's
Sure.
probably why he was selling in 2018, thinking things were going
Yeah.
to go down. But then what's happened since the pandemic is inflation has really gone up. And I think, to his point, I do agree with him that inflation, the way the government reports it, is much um, lower than what it probably really is. So if you really look at inflation, it behooves the government to keep the
Yes.
calculation
It's a
fairly low.
managed number. Yes.
It's a
Yes.
managed number that allows us to have GDP production above inflation, which tells us that the economy is really healthy. And if we understood how bad inflation really was, and how much our purchasing power is diminished over time, you'd have a lot of really unhappy citizens probably revolting against the government. So I do agree with George at a high level that inflation is definitely higher than what it's reported. And it's
Sure.
been recalculated in such a point that to such an extent multiple times to where it doesn't accurately reflect
Yeah.
how high inflation really is. So yeah, I think that at this point, if he could find great deals and rates were lower, he'd probably go back
Oh,
into,
okay.
full investment mode.
I didn't know that.
It
Okay.
was my sense in his discussions.
Well, that is awesome to hear because again, I just played out in my head. It's if you truly believe inflation is 10% and it will be 10% for the foreseeable future, why wouldn't you borrow money at 6, get positive cash flow today, and just sit back and print money? I mean, that's
Right,
just I can't logically get out of that, right? If you think
right,
10% this year and then it falls over, I understand. But
right,
but if you really do think it's going to be 10% for the foreseeable future, I don't know why you don't go buy as much real estate as you can, or at least residential, right? Commercial, I get, right? The debt's not fixed. You got all these reset. I
right,
get it, but resi,
right.
I just didn't understand.
Yeah, and he really didn't go into that level of detail, but what we did talk about, and he discussed, and I asked a question and he and I talked about offline,
Oh,
is
cool.
that really, in a future world that's probably more inflationary than what we've expected or what we've seen in the past, kind of like we
Okay.
talked about in video number 2 today, that the way that you really hedge that is you buy cash flowing assets and real assets,
Oh,
right?
there you
And so
go. Okay.
things like real estate, things like gold in terms of its ability to hedge, its history of a store of wealth. It's not a great investment per se. It doesn't produce cash flow, but it could be a way to preserve some of your wealth. Depending on what's happening in the global economy. If the U.S. loses world reserve currency status and we continue to have high inflation and low growth, we talked a lot about growth and how GDP is produced more by government spending today than it really is by production. And so, in that world, he does agree that it's important that we invest in ways that help us to, hedge a higher inflation rate.
That's awesome. And I'm very happy to see that. And again, George produces a lot of great content. I haven't not seen it all, but that's just how it always made sense. So of course that makes sense that he would say that because I agree with him. I think inflation, when you look at the structure and we go back to video 1 and 2, right? We're going to bring back manufacturing. I believe and have said repeatedly that I think the worker, right, the employee is going to get theirs this part of the cycle, unlike the owners, right? Kind of like 1970s all like over again,
Right.
wage inflation. So again, I agree with, I don't know, a lot of what George Gammon says. But again, for me, it's one thing to agree with the thesis and how the chessboard is laid out, but I want to make moves. And so it's nice to
Right.
hear that he
Right.
agrees with that. So that's
Yeah, one
interesting.
of the things that I asked him, because this is something that, I've been trying to reconcile in my mind and see kind of where will this go? How does the US economy specifically kind of um move forward in a world of a lot of a lot of headwinds, I'm sorry, that are, really making it difficult to balance some of these external forces. So for example, Michael, one of the things that I asked him is if you go back and you look at um, since the 1960s, if you look at growth, GDP, most of GDP after the baby boomers kind of aged out of peak worker and consumption years, we have not been replacing the same number of people as
Mhm.
they're exiting. And so if you look at a graph, what you'll see is that GDP through real production has gone down since the 60s consistently. And so at the same time, government spending is what's produced GDP.
Ah,
So
yeah,
more and more and more government debt required to keep GDP above inflation. And
yeah.
thus they've kept rates really low to try to incentivize, production, incentivize investment. We haven't actually done that. Instead, we've invested in, stock buybacks and financial engineering rather than real production. And so we've got this real issue where if you look at the charts, you'll see GDP is coming down As a result, interest rates are kept low. As a result, inflation stays really low. But the law of diminishing returns of US government debt to the amount of production it's actually producing is really bad. And so what you see is over the long term, if you look at the big picture, it indicates that the less and less people we're birthing to replace the workers that are leaving and the less immigration that we have, the fewer workers we have to produce GDP. That would tell us that interest rates have to stay low for a long time and the government has to keep spending to get production up. On the other side, now you have all these inflationary forces that are saying energy is going to be high. If there's fewer workers, they're going to demand higher wages, like we talked about in a previous video today. And all of those things bode for much more inflation. So I said to George, this tells me we have this real stagflationary period over the next couple of years where production is low and inflation is high. How do you handle both of those things? And if you go back and you read, Ray Dalio, for example, he has a book on big debt cycles and a changing world order. And what you'll see is that governments generally, when they have a lot of debt and their production is low, they do a couple of things. They bring in more immigration, okay? And they start taxing substantially to cover the extra costs they have to spend, government spending to create production. And so George is in agreement with me that we probably have more of a stagflationary environment over the long term than what we've had in the past. And what the governments are going to have to do between financial policy, fiscal policy, and monetary policy is come up with a way to bring production back, which is going to require significant government spending, which is going to require significantly higher taxes in the future and more open immigration policies. And so we both agree on that long-term macro perspective. Now the question is the government going to get it right? How long is it going to take? What happens in between? Do we have these quick cycles of faster changes between expansion and contraction and expansion and contraction? And, the Fed constantly teetering back and forth between, inflation and production and spending. And so, I really appreciated his perspective on that. And it tells us as investors, how do we take this high level info and make it tangible and make it actionable? We think about things like, okay, higher taxes. Well, how are ways we can hedge higher taxes, right? Immigration. If more people are coming in, we will need more housing supply. How can we provide more housing supply in areas where we think those jobs are coming? The manufacturing, et cetera. How do we hedge rent controls if that starts to happen? So, you can look at the broad economy and realize there's things I can do today with this information that will make me a better investor and more profitable, and not surprised when these things happen.
Well, I'm more convinced than ever that I'm gonna have to find a way to get to a George Gammon event to see him speak, because I love how he can tie all these complex things together. Again, I don't always agree, but I appreciate his depth of research, knowledge, and experience.
Yes.
So Anna, where can people find you?
Great. You can find me on your show almost every week and on my playlist on your channel. You can find me at social media, Anna Kelly, REI Mom, and my website for coaching and consulting is reimom.com.
Awesome. Thank you so much.